Right, so looking at June 2014 partnership question, Swigger and TUS entered into a business partnership on the 1st of January 2013. Total amount of capital contributed through the partnership was 60,000. Swigger gave 40,000 of the total capital and TUS contributed the balance. It is now 6 months since the partnership was formed. Now, this is an important thing they say in here, 6 months. So we need to think about this when we're doing certain calculations. So I just highlighting this in yellow so we don't forget. Swigger and TUS agreed to share profits in a ratio of 2-1. Right, profits in a ratio of 2-1. Partners' drawings for the 6 months works out to be 8,000 for Swigger, 600. The following information is also available for 6 months ended 30th of June 2013. Profits calculated is $15,380. This is our net income or net profit. Other revenues earned but which were not yet included in profits is $620. So we need to add this here. This is an adjustment to be made. Interest on capital is 10% per annum, right? So we need to, when we work out our interest on capital, we need to prorate it so that we're checking it for 6 months. Interest on drawings is 5% per annum. Same thing with interest on drawings. Annual salary for TUS is 18,000. So we need to prorate this, meaning that we need to adjust it for 6 months. Right? By either dividing it by 2 or you break it up by 12 and multiply by 6. Same thing, because you multiply by, you divide by 2 if you do that. So this is $9,000. Let's look at the questions. First question they're asking is, how much of the capital did TUS contribute? Right? That's an easy one. Total capital is 60,000, and one of the guys contributed 40,000. So this means that TUS contributed 20,000. Now, prepare the appropriation account for the 6 months period. Before we get into just starting to write up the appropriation account, let us make sure that we know what all our figures are. So first one is the net profit. And we saw that there was a little adjustment for us to make with the net profit. 15,380, and we need to add the additional revenue. So net profit would have been 15,380 plus 620. That's the other revenue that we had to add to the net profit. So 15,380 plus 620, 16,000. Next, we have interest on drawings is the next figure we need for our appropriation account. We're going to do each person separately. What's their names again, boy? Swigger and TUS. Let's do Swigger first. Swigger drawings was $8,000. Multiplied by 5%. And then it's for a 6-month period, so we're doing it by 6/12. So 8,000 by 5%, that's 400. Multiplied by a half, that's $200 for Swigger. And for TUS, his total drawings is 600 by 5% by 6 months out of the 12. It's 30 by a half, 15. So we finish with out. Interest on capital. So remember, the capital amount was 60,000 in total, 40 by Swigger. and this was 20,000. And we're doing interest is 10% per annum. But we have to do it for half a year. Right, so this will work out to be 4,000 by a half, and this is 2,000 by a half. 2,000, 1,000. Salaries is another one we need to work out. So this was 18,000 per year. Right, so for 6 months, 9,000. Now that we have all of that sorted out, we could do our appropriation account. Now you may not have as much room as I do. So you could do this either on the side of your paper or on the back blank side of the sheet, that particular page on the booklet. What you would do is when you're doing the profit and loss appropriation, you will just make little jottings next to each of the titles that you're working. This wouldn't be for the year. You'd have to say for 6 months ending 30th of June 2013. They start with your net profit. We already have our working for net profit, 16,000. So that we need to add our interest on drawings. So we have swig and this. This is what we're talking about. You just write your working 8,000 by 5% by 6 over 12. This is what I mean. 200. And then this other dude, 600 by 5% by 6.5. 60, 50. Right, so we kind of across 215 here. 16,215. We're then gonna deal with interest on capital. $40 by 10, $20 by 10. This working out to be $3,000, and then we have less salaries. This is the only guy getting a salary, and he's getting a total of 9,000 for 6 months. Right, and again, we could just show you working here. Right, to multiply by 1/6. 12. So this is our appropriated net profit. And then we're going to do share profits. Swig and Ting. And they said 2 to 1. So 2 to 1, 2 plus 1 will give me 3. So that means 2/3 and 1/3. Right, put another bracket. Grab a calculator. Four two one five divided by 3. Multiply by 2. 2810. And 1405. 4215. Double lines. And that is our profit and loss appropriation account for both of them. Swigger and Tis. Right? Now they wanted something else. They wanted us to prepare the current accounts for the partners for 6 months ending the 30th of June. A column of current accounts. Right? So this is part C. So current account. And we have Swigger and Tis. Now we have opening balances for these guys. Swigger did they give us? Oh no, this is for the first 6 months. This is not one of those questions where they started with our opening balance. They brand new, and this is the first 6 months. So no opening balances for them. None. We could then look at the things that will increase. Interest on capital, salaries, share of profits. Interest on capital, 2,000 and 1,000 respectively. 9,000 for this. And share profits, 2810, 1405. Then you're gonna have things like drawings and interest on drawings to reduce these. Total drawings was 8,600. Remember that these are within brackets, right? If you forget those brackets, then you'll run into some problems with our calculation. Get some wrong answers. 4810 minus 8,000 minus 200. Just double check. Yeah, that's how much she did take out. So Swigger already started taking out more than he earned. Then 45 minus 615, 10,790. Right, so Swigger, he's already withdrawn in excess of his earnings, $3,390. This is in good standing. Even though this had some drawings and interest on drawings, he's still been able to earn $10,790 in the partnership since inception. Right, that was all that was required for this question. Right, so our profit and loss appropriation account, so that we ended at 4215. And then for our current account balances, we see here that Tus and Swigger ended on different closing balances.